Well, guys, it is a Red Monday here, and I'm joined by Paul Meeks, Jeff Mackey, Charlie Peabody. We're going to talk about this Red Day, what's going on, and this might be one of the last shows of the year. So here we go, guys. Paul, what do you got today?
Good morning, Benjamin. Hello, fellas. Happy New Year to all of you and all of our subscribers. What I did today, Ben, is I put together my list of tech picks and pans, which I'm very confident that if you execute them today and come back a year from today, you will be very pleased. So on the long side, and I'll mention them quickly with just one statement. We don't have to go into too much depth. Some of these stocks I've talked about on the program. On the long side, AMD, $120 buy limit. I will put all these stocks and their limit prices on our site. I think that the company will end up being a number 2 in GPUs to NVIDIA, and they just have to see some stabilization in their legacy CPU business, and they'll do just fine. Next on the long side is Uber. I think the beating that the stock has taken is way exaggerated based on the threat that Waymo and Tesla will go solo, and they'll have robo-taxis, and Uber and Lyft will be disintermediated. I don't know about Lyft, but I bet at the end of the day, Ben, that Uber will be working with at least Waymo, maybe not Tesla, but even both companies. I don't think they'll be disintermediated. You need them. Next, this is a stock that I originally heard from Russell Young, and I did my own research on it. I like it. It's a momentum play. The first two are turnaround plays. This is AppLovin. AppLovin should have a very nice meet, beat, and raise quarter coming up in a few weeks. Meta, I still like. It has come back down. I think they're doing the right things, and I'm feeling more confident than I had before about digital advertising. I like Meta, not necessarily Google. Marvell. Marvell is a stock along with Broadcom that I'm playing as more and more of the hyperscalers decide to design and build their own chips so they're not held hostage by NVIDIA. Mercado Libre, I think, is overblown on the downside. I like that with a 1650 buy limit. Oracle is the only ERP software company that I'm betting on because, as you know, I think 25 will be another year of infrastructure build, and I do not believe, at least not yet, that all these software companies will be participating in the theme. I think some of them might even be disintermediated. I like Oracle not only because it's a call option on AI, but they also have Oracle Cloud Infrastructure. So they are also an infrastructure play, not just dependent on apps. Booking.com, Robert Marson in the online travel agencies likes Expedia as a rebound. I like the leader, Booking.com. My limit is the 50-day moving average, 49.31. Micron, I'm buying at 85. My all-in price target now is, or probably price is about 100. I still think there'll be an inflection when high bandwidth memory means more than their legacy consumer electronics business. I like ASM lithography, even though there is some tension with the Chinese. Check out the article, good article today about ASML in the Wall Street Journal. And NVIDIA, I'm going to stick with NVIDIA for another year, though I want to buy it at 130. I think that even though the stock tripled in 23 and is working on a triple this year, earnings and cash flow have moved up even more. And I do think that they'll continue to have a good year next year. So those are the longs. I'm going to put them up there with my specific to the dollar buy limits. On the short side, I think this whole quantum computing trade, except for the pop in Google, which already has a legit business, but I'm talking about Rigetti. I'm talking about Quantum Computer. I'm talking about D-Wave. These companies, come on, man. Quantum computing, when's that going to really happen? When's that going to be monetized? We're not even monetizing AI yet. Now we're talking about quantum computing, and these are companies that are $3, $4, $5 million market caps. They're not supposed to, even in the best case scenario, do anything but lose money and burn cash for years. In the meantime, they've rocketed up. This is bullshit. And so
I thought,
Yeah.
Come on, man, this is bullshit is a really tough short thesis, though. I mean, what's going to tip them over, Paul? What do you think? It's just it's a total air pocket, and this is just kind of an end of year pure markup, or is there anything there that you're just going to get headlined to death over the course of the first 6 months, shorting these?
Well, there was an announcement about a month or so ago, NASA working with one of these companies. And of course, the main driver, Jeff, was the announcement of the Willow chip by Google. So I think if quantum becomes a thing, Google might be the way to play it. But in the meantime, you got a pretty strong digital advertising business and you got Waymo. These other guys are fluff. So yeah, I do think these pure plays that nobody heard of a couple of weeks ago, I do think they're absolute fluff.
Yeah, I mean, look, you have what we talked about.
Pardon me?
Sorry. I was just going to say what we talked about in the pre-market is that, you got the fart coin and the trading sardines and the terrible ETFs and all this stuff. It's just another version of that, right? It's just a narrative with a low float and people pump it up and then you suck in some suckers. And look, I'm with you. Quantum computing seems like it's not quite, this is not a fundamental.
Got a cool title. Well, this reminds me, Ben, and I'll close it here. About a year ago, we had a big move, which ended up being a good short opportunity in AI plays like SoundHound. Remember C3 AI?
Oh, yeah.
Some of these moves, they ended up being on fluff, and then they collapsed. They might have come back recently, but come on, man. Big Bear AI. This is the same nasty trade that you could have made on those names about a year ago.
One thing I want to say real quick, that Uber, that chart looks absolutely terrible.
Oh, yeah.
And it just broke its downtrend or the channel and but doesn't Lyft go away first? I just looked at the chart of Lyft. It's like only the right side of Jeff's Christmas tree of death. It's just all it knows is the death part. Yeah. I actually flipped that IPO and it's always a special stock when the highest trade it ever trades at is day one on the IPO day.
Yeah. Well, Lyft
is a lot of iBankers are getting a nice bonus.
Is that Lyft that Uber trade? Where's that value at? Where's the give me the numbers on that. What do you think they earn? And where's the hey, you got to buy it here level? Is it now or because I looked at the chart, it looks like $40 is where you kind of really would want to back it up. But I don't know. What do you think there?
Yeah, I have a limit price on that stock of 60. I actually think, they had that announcement of Waymo going into Miami, Florida, and that rattled the cages. It wasn't necessary that Uber reported such a poor quarter. But despite the fact that the tech market has been very wobbly in the last couple of weeks, it looks to me that Uber is starting to consolidate and go sideways. So I like 60. This stock could easily, earn a couple dollars per share. They've done it in the past. So, yeah, I just think it's a turnaround play. My list is always a mix of momentum names on one end of the barbell and then some deep value discounting, including this one on the other side of the barbell.
And I'm taking I'm long Uber as well. I've started buying that just for the same reason. The automated driving that's going to be a real thing. You're underestimating Uber's ability to interface with the customer. That still matters. They've done work that Waymo hasn't even really gotten around to yet. They need a partner. It's a complete natural extension for Uber. It's not like this is a wholly different idea. It's just a car without a driver. Someone's going to own that. It's the perfect model. It's how they're going to go about doing this system. And so how does Uber not win on that? I think that it's overstated. So you've got a little bit of a valuation problem. We should be so lucky that gets to 30. That's the kind of stock you'd love to buy it cheap and it'll feel like shit to buy it when it gets cheap. But if you can, it's a total dump truck play because they're not going to die. That's just silly to think that Waymo is going to take them out.
Yeah. I'm with you there. That's actually kind of interesting to think about. I like that Jeff's long it too. All right, Jeff, what do you got for us today, buddy?
I'm looking at the other side of the mountain of kind of bullshit stocks that we've seen, and I'm looking at Stitch Fix. I'm looking at kind of the names for next year that I want to get long, playing off some of the themes that are working in the background. Ben, we've talked about it all year. These companies that just didn't die, these COVID plays that got super duper popular, way overdone in 2021. We've seen a lot of those start to bottom out. And, it made sense that they spiked into COVID. They pulled forward a ton of demand, but the Chewies of the world, that was a great play for us. Peloton was one of my best trades of the year on the long side after just years of dying. And what they simply established was they're not going out of business. Stitch Fix hasn't seen that pop yet. And I think they're right at that inflection point where it's a company obviously way overdone, got to 106, which is just bonkers. It's now at 4 and change, probably today, getting under 4. They're not going out of business. Your actual risk that this company dies is pretty low, very low. I don't love the business as an idea, but at 106, it's silly to think everyone's going to subscribe to a clothing service. At $4, trade 2 times cash with no debt. Stabilizing business flows are going to go cash flow positive in the next 18 months or so. Which isn't a crackpot dream. Like if that was a crackpot dream, they would have figured out a way to go out of business over the last 3 years. And so you still have Bill Gurley from Benchmark in there. He's long. He's on the board. He's turned around. It's nothing that is going to turn around this second. There's still plenty of wood to chop before they become a cash generation machine. But holy crap, at $4 generating cash with, again, a model not unlike Peloton, where you have a loyal subscriber base. Now, Stitch Fix, unlike Peloton, is kind of in the process of winnowing down that customer list. You sign up a lot of people who are not productive customers in the bubble, and they're still kind of picking their way through that. It's not a great company. And I think that you might notice there's some skepticism built in from the drop from $106 to $4 per share in the last 3 years. I think that's the market, carefully pricing in a little doubts about this. We've done that long enough. They're not going out of business. They're trading relatively cheap. It's been a theme that's worked for us in the past. These companies left for dead. Once they turn that corner, man, they're certainly crap shorts. And you start to get to a point where if this is generating cash, it makes a lot of sense for a now private Nordstrom to start picking up. It makes sense for a lot of different companies to be looking at this as a possible acquisition candidate to benefit their brick and mortar kind of staid business. Why would Nordstrom not buy these guys if they're cash flow positive once Nordstrom gets their merger done? You don't need really a merger, but there's a lot of ways to win with this. And the way they lose is if they just flat out die. Yeah, and that's within the context of a $4 stock. The volatility is going to be 20-30% either way. So this is not a just park it and don't even ever worry about it, because you're going to have some risk, but that's going to be mostly in the price. In terms of your operational risk, again, they survive. And so it's kind of one of my favorite plays where let's just see what happens next year. $250 million.
What's cash are they generating? What?
$250 million, $253 million. They're going to burn a little cash this quarter, and that'll probably be the end. Like they have been a cash burning machine, but they're not anymore. And so they're kind of turning the corner, getting cash flow positive. Now they're not looking for a full year of cash flow positivity until 26. But by the time they're there, that's going to be a $12 stock. They're closing their UK operations. They got really far flung, exactly like you'd expect them to do. Exactly like, you'd expect when they went public in 19 or whatever it was. And holy shit, in 2021, no one's going to go to a store. We're all going to have personal shopping bots. And it's like, that was obviously crap. You got to unwind that. That involves reducing your inventory, your marketing. They closed their UK operations. And all of a sudden you just have this steady Freddy cash flow business with smaller number of customers who really like them, really use them. 5% revenues per customer for last quarter. They had gains, which is great. So you've got this kind of disconnect between their top line because they're reducing operations, but underneath that, their loyal customers are actually spending more. Fantastic. I love that combination. Get rid of the deadwood and just focus on the customers that you have. If it's going to be a growth story, that'll kind of come into its own. But the only way you're going to make it a growth story is to just digest the gains you've had and to pick away at the shit customers and kind of use technology and inventory and have that be your friend and stay alive. And again, at a cash flow, it's they're not going out of business. And that's sometimes good enough. I can afford to wait on that as long as I keep an eye on what they're doing quarter to quarter.
Yeah, I mean, $250 million net of the market cap is net of cash, right? So it's $500 million market cap, $250 million in cash.
No debt.
So you're paying $250 million for the operations. I mean, that's the kind of situation where they're cutting all the costs. They're getting a little tougher from being dead for a couple of years. Those stocks can work. I like that idea.
I like that idea.
And it's not great yet, but it could be making 25-30 million easily by in a couple quarters. So then all of a sudden you're getting into kind of realistic multiples. You're getting into a really nice little business that just works. Again, it's are there any guarantees? Yeah, there's wood to chop there. but they're on the right path. They got good management. They got good leadership. And certainly they've been weather beaten and tested over the last 3-4 years. So it's again, I like them to survive. And if they survive, eventually they're going to pay off.
Yeah, I can get you with that. Anything else, bud?
We're still picking through the stuff, trying to figure out reasons to be long. Some of the winners from last year have been looking at Walmart is going to have its best year since 1998. Now, that doesn't mean next year is going to suck. It just means that if you're the largest retailer on the planet Earth, your chances of going up 80% to 2 years in a row, probably pretty low. I say that as a shopping enthusiast. I just don't know that they're going to get more than, I don't think they're going to get $1.4 trillion of revenues, which is what it would take for them to double from here. So that's going to consolidate. I don't think there's a huge pressing need to sell them, but the multiples, they're not as high as you might think. Earnings have gone up a relative amount, but again, there's been a lot of PE expansion in the winners from this year. We're seeing some of that come off. It's getting burned off here towards, as we are in this nice little interstitial between Christmas and the first, which this year is called the freaking bloodletting season, as it's getting a little ugly out there. But, it's these stocks figure to consolidate. They don't owe us anything. So again, I'm kind of trying to rotate into names that are a little more boring. We're talking about Best Buy offline. That'll be a buy at some point. Is it going to be anytime real super soon? Not really. Not a buy and hold. It's a Target can figure out their operations, but it's time to start, I've got like a lot of investors out there sitting on huge gains. No one wants to sell before the end of the year. And you're kind of just have to temper your expectations for those. You can trade it a number of ways. But in terms of my longs, I'm looking for names that haven't spiked yet, which is how I got into Stitch Fix and how I'm getting into kind of the more staid names. This will, stay tuned because we'll come up with some ideas as we get into the first quarter. And it looks like we're going to get some buying opportunities relatively quick because if we keep the market open for the rest of the day, we're going to be down 1,000 on the Dow before we sign off. We'll have an update in an hour or so when I buy the great crash of 2024.
Well, just we'll move to Charlie, but one thing that's going on with the market is you'll have the options dealers are in a negative gamma position, which means they trade with the market and not against the market, which kind of stabilizes things. And then there's not a lot of people trading. And then you have this huge pension rebalance because of the amount of bonds, the bond sell off. So there's a lot of bond buying and stock selling into a market without a lot of liquidity. And, I sent it to our stock chat for our subscribers. Since 1952, this will be the first time we had more than 2 days of 1% down the last 5 trading days of the year, if it holds today, which it looked like it probably will. Crazy.
Yeah. All right, Charlie. Flight out of stocks and into Sam Darnold jerseys. I think there's a lot of Vikings merchandise being moved. I think there's a lot of excitement over the NFC North, the revival there, and people are just taking some off the table and getting long Darnold. And it makes sense to me. That's a trade that works.
Yeah, well, that's true. The guy's this year. He beat my Packers last night.
We're long Sam Darnold and short Aaron Rodgers.
Yeah, that's been a good one, too.
It works all day, Charlie.
The New York theme.
All right. Just short the Jets in general. Let's just be honest. Doesn't matter who the quarterback is. If it's Sam Darnold or Rodgers or Jeff Mack, it wouldn't matter. It's all the same results.
I did look it up, actually. Charlie, if you would have bet on the Vikings to win the Super Bowl in August, you would have a 7-bagger right now. Those odds have been incredible. It's you might want to hedge some of that off, but you could have bought the Vikings dirt cheap in August, baby, when no one believed except for a scrappy young boy named Jeff.
This is a happy Vikings fan right here.
It is. It's a good day. I'm not going to lie.
All right, Charlie, what do you got other than being sad about your Jets?
I'm going to continue with the theme that things that need to be financed are going to disappoint because affordability is a problem. And with the yield curve from the 5-year out to the 30-year shifting higher, affordability is not getting any easier. So last week we had new home sales. So I just want to update you. It's old news, but I just want to update you. The numbers for new home sales came at 664,000. You can see from this long-term chart, it's been, fairly steady in the last year or so, but down from the, pandemic levels. And, one of the things that you're going to see is that 664,000 is up from last month, which was depressed by the hurricane in the South. but it's still below, the 700,000 rate that we would consider at least reasonable. So it's still a fairly depressed environment for new home sales. Jen, if you go to the next table, the flesh-colored columns are the new home sales data. The first column shows the 664,000 units sold. The second column shows new homes as a percentage of total. And you can see they've lost a little bit of market share in the last couple of months. The columns to the right show the supply. And this is important. I mean, while the month's supply of new homes dropped to 8.9 from 9.2 last month, it's still a very elevated level. And if you look at the far right column, it shows the number of unsold homes. And you can see the number of unsold new homes continues to rise. So there is an inventory problem for these home builders. And that's why they've slowed starts and why they're increasingly having to offer incentives, which means gross margins are getting cut or pressured. And that's been the general theme. I played on the short side, the boat guys like Polaris and Brunswick Corp, they've been terrible, stocks to own. On the motorcycle side, Harley Davidson, Hog, on the RV side, Winnebago, they've all been terrible stocks. So this theme continues to play out negatively for whether it's boats, cars, boats, motorcycles, RVs, or homes. The one area that has held up relatively well has been cars. And we're going to get auto sales data on Friday. And, for the year, they're going to come in a little under 16 million is our expectation, which is, up 3% year over year. Growth rate is slowing from the 12% a year ago, but, still up. And other than the OEMs, like Stellantis and Volkswagen, which have done very poorly, some of the dealers like Carvana and CarMax and AutoNation have held up very well. Those have been stocks that have done very, very well, much to my dismay, because I've been trying to short them every once in a while. And so, but there's an article in the Journal today highlighting what I've been saying, and that is the discounting in the car industry is increasing. We've had 5 months in a row of increased incentives to move cars off the lot. And if I talk to my banks, the one area that they are seeing some loan growth in is what we call floor plan. That's the financing for car inventories that remain on the lot. And so if there's a pickup in floor plan lending, it means that inventory is building on the lots. So I think incentives for these car dealers is going to have to increase much more dramatically. So I'm anticipating that the Carvanas and the AutoNations and the CarMaxes are going to disappoint next year, and that you're seeing the best news right now, partly because there was a pull forward in effect as people were trying to buy cars out of the tariffs. So those are stocks that have not worked on the short side, but I think will work on the short side. Finally, I just want to mention
starting to work a little bit.
A little bit, but I've tried it 3 or 4 times and have had my head handed to me. So I'm a little cautious.
That's been a widowmaker for the shorts, for sure.
It has. So but I still am thinking that part of the theme will work sometime in 25. So I'm sticking with
Charlie. What's the of the AutoNation, CarMax, Carvana? What is worst in class? Like if you were to short one, what would be worst in class?
Well, CarMax seems to have the most difficulties. Carvana is the one where there's a lot of questions about their practices. Let's leave it at that.
Yeah.
So, but yeah, if there wasn't manipulation going on, Carvana would be the one that I would love to understand.
We faded that CarMax 2 weeks ago at $88. I see it's at 82 now. I don't know. That was just on the algorithm. That wasn't actually any personal fundamental view. But yeah, I like that idea. And that Carvana, man, that run was just insane. $3 to $260. Holy cow! What a stock!
Just bonkers. Just nuts.
And there's some questions as to whether. There's some questions as to whether they've been doing, channel stuffing, between the relatives, but I'll leave that alone because that's a touchy subject. Okay. And then one last thing I just want to mention, because, the bank stocks, continue to be a favorite theme of many people on Wall Street. And this past week, we had this back and forth between the banks and the Fed about suing each other. And, one of the things that the Fed came out and did was said, this upcoming stress test for capital assessment, is going to be changed where it's going to be maybe less stressful or spread out over a multi-year period, and increased transparency so the banks can see what the Fed is modeling. And that is part of the broader theme that under the Trump administration, deregulation is going to play out in a number of industries, and the banking industry is viewed as one of the big beneficiaries of deregulation and has the chance to be re-regulated higher. Jen, I don't know if you can put up that last chart. This is a table that I keep showing buybacks with my fourth quarter estimates on the left-hand column of buybacks. And generally speaking, what you're going to see is the banks have very robust buybacks, 3% or more. And I think if the Fed stress tests are, recalibrated in a way that is less stressful to their capital, you're going to see buybacks improve even more. So these are some of the large cap names that I follow very closely that, have very robust buybacks. But you generally, for buybacks to have an impact on stocks, at least bank stocks, they have to be around 4% or better. So someone like a Wells Fargo, really stands out, or a Citizens Financial really stands out in terms of buybacks. Obviously, my favorite remains Citigroup, which, by the way, is the only bank stock, large cap bank stock, that has stayed in positive territory during the month of December, because the month of December has been horrible for bank stocks. They've given back all of their post-election gains that they had in November in December. And the regionals have been the worst because they're viewed as the most sensitive to higher rates. So higher rates have caused people to rethink their regional thesis. I'll leave it at that. Sorry, I'm all over the lot today.
No, that's good. That's good. Yeah, that's good. Good show. We have a lot of good ideas. Paul had his list of buys, and he wants you to short Qubit and all the quantum computers. Jeff got some good idea with Stitch Fix, and Charlie remained short all the stuff that you need to finance. And you know what? This is an ugly day, and I think 2025 is going to be not as comfy as 2024. I think it's going to be a year where you're going to have trading acumen. I don't think it's just going to be another year where everything goes up the whole year. So anyway, that's enough from us. Thanks for joining us, and Happy New Year.
Happy New Year, everybody.
Folks.
Happy New Year. Thanks, Ben.
All right, guys, I got to run. See you later.
Take it easy, bud.